Ulta Beauty is on a roll. The beauty retailer's stock is soaring, and they've just announced their second consecutive quarter of boosted sales and earnings forecasts. Let's dive into what's driving this success. Ulta Beauty is projecting impressive figures for the year. They now anticipate net sales to reach approximately $12.3 billion, a step up from their previous estimate of $12 billion to $12.1 billion. This is a significant jump from last year's $11.3 billion. Furthermore, they expect earnings per share to be between $25.20 and $25.50, exceeding their earlier predictions of $23.85 to $24.30. And this is the part most people miss. They're also anticipating a rise in comparable sales, which includes sales from stores open for at least 14 months in e-commerce, projecting a 4.4% to 4.7% increase, up from the prior outlook of 2.5% to 3.5%. The company's stock responded positively, climbing over 4% in extended trading. CEO Keisha Steelman attributes this positive trend to exciting new product offerings, enhanced in-store and digital experiences, and impactful marketing strategies. But here's where it gets controversial. Even as the company acknowledges that many consumers are being more careful with their spending, especially as the holiday season approaches. Looking at the fiscal third quarter, Ulta exceeded Wall Street's expectations. Here's a quick comparison. Earnings per share: $5.14 versus $4.64 expected. Revenue: $2.86 billion versus $2.72 billion expected. Ulta seems to be benefiting from the fact that beauty products remain a priority for shoppers, even when they're cutting back in other areas. However, the company faces stiff competition from various rivals, including big-box retailers like Walmart, online platforms such as Amazon, and emerging players like TikTok Shop. According to data from Circana, the beauty market is thriving. In the first 9 months of 2025, prestige beauty sales increased by 4% and mass beauty sales rose by 5% year-over-year. The market research firm also suggests that beauty products will be popular gifts during the holidays, with more consumers planning to give them compared to last year, particularly those with higher incomes and families with children. Revenue for the quarter increased from $2.53 billion in the same period last year. Comparable sales saw a substantial 6.3% increase year-over-year. This growth was driven by increased store and website visits and higher spending per visit. The average ticket rose by 3.8%, and transactions increased by 2.4% year-over-year. In the 3-month period ending November 1st, Ulta reported a net income of $230.9 million, or $5.14 per share, compared to $242.2 million, or $5.14 per share, in the year-ago quarter. In other news, Ulta announced in October that Christopher DelOrefice will be the new CFO, starting December 5th. As of the close of trading on Thursday, Ulta's shares have increased by approximately 23% this year, outpacing the S&P 500's nearly 17% gains during the same period. What do you think? Will Ulta's success continue? Or will the increasing competition and economic pressures eventually take a toll? Share your thoughts in the comments below.